Oh boy, here we go again. According to some right here, Tesla will be at over $3,000 per share, Palantir will be over $400 per share, and even SOFI will be at over $400 per share much sooner than you think. Now yes, I think these are all great companies who I think will be huge in the future, but are these prices even realistic for these stocks? Well, there are some very uncomfortable truths about all this that you need to hear. So let's cover that today, right after you gently tap that like button if you like getting the truth without the hype. And do you want to retire early and be financially free? If so, make sure you check out my new channel where all we talk about is retiring early and being financially free. So if you're interested in that type of content, it's the pinned comment down there. Make sure you check it out if you want that. All right, so I'm going to discuss each one of these stocks individually. Don't worry, guys. We'll talk about them all. And yes, the uncomfortable truth about all of it is coming as well because you got to know that. To be clear and upfront, I own all three companies and I have no plans to sell anytime soon. I am bullish on all three companies and I would love for all this to be true and all those numbers being discussed to actually hit. But I also don't live in fantasy land that some folks want to live in for the past few years that has gotten us, me and you, retail investors, completely wrecked over and over again based upon these fantasy little hype land type theories and ideas and such. I don't personally invest in hype. I invest in fundamentals. So let's get down to the truth with these stocks. So let's discuss SOFI first. I just personally don't see SOFI sniffing $400 from here at this stage in the game, unless we are talking about like a decade plus down the road or something like that. And even then, it's highly unlikely just given the type stock that it is. Kind of as they move forward into traditional banking and all the barriers that that brings, the growth rates are going to slow. Just that happens in general, just as companies grow. And the multiple, more importantly, is going to come down. They just turned profitable, meaning we can't even really assign a multiple for them yet. We've talked about that in other videos about them because, hey, we don't know. Are they going to give it a fintech multiple? They're going to give it a banking multiple? Nobody knows at this stage. So we don't even know that, much less being able to remotely accurately project out future prices. But unfortunately, as they start to look more like a traditional bank, they will start to be valued like one, unfortunately. And that is one of the big risks with this stock is how far down does it actually bring that multiple if they start looking more and more like a traditional bank. But for right now, I can triple the multiple of a traditional bank, and it's still going to be very, very hard to hit that number a decade from now, much less 2028 like some other folks out there are actually predicting is going to happen. And remember, I love the company. Nobody has executed better over the past year and a half or so than they have. They have executed just as well as anybody else out there in the market. And guess what? I'm going to make a lot of money if that number actually happens. But like others on here, it is pure speculation with these crazy numbers. All it is. Pure speculation at this stage for SOFI. So let's cover Palantir next since it's kind of different. And of course, the uncomfortable truth about all this applies perfectly here too. So we will get to that and we'll talk about Tesla as well. Don't worry, it's all going to tie together, guys. Oh yes, we can project out some with Palantir because they are profitable and everything else, but the growth rate is a little bit tricky. The growth rate we were given on guidance was right around 20% or so, which is far short of the 30%. So that's something that's working against the stock. I don't necessarily, like I said, I'm not negative on the stock at all. That's just something that's working against these crazy price targets that are people putting out there. And ultimately, we have to answer the question, will Wall Street reward them with a reasonable multiple once the AI hype kind of dies down? And it's going to die down at some point in time. I'm not saying they're not the leader. I'm not saying their hype and their AI is unjustified. I just know that the multiples are going to come down as the AI hype kind of dies down as well. So right now it's sitting at a forward multiple of like 77 or so, which I don't believe they will get in the future as they grow and mature. So I'm not saying it's necessarily crazy overvalued right now or anything like that. I'm not saying that at all. I just know in the future, as they grow and mature, that multiple will come down. And eventually, I believe a 30 to 35 is probably more reasonable in the future, which makes that $400 price target a lot harder to hit. Again, unless we're looking out a decade plus or something else crazy like that. I'm sorry, I don't make the rules here. Wall Street hardly ever pays multiples that high as it is right now. So kind of banking on that to me is not prudent when I'm looking at my analysis. Now, it's great if that happens, but that's not the most likely scenario. I don't need the 0.001%, just like there's a 0.00001% they're going to go bankrupt too. That's stupid to sit there and try to make a bankruptcy case for the stock as well. That's speculation kind of the other way. I don't want to do that either. And just like the other stocks, this number, like we just said, is more than a decade away. And even if I want to assign a multiple of 77 or so all the way through that whole time, we still aren't really getting there anytime soon. And that leads me to the uncomfortable truth about all this, and that you must understand this, guys. You have to understand this. If you want to not get caught up in the hype runs once again in the future, you got to understand this. Because when we look back, the 2021 hype seems obvious in hindsight, but during it, many folks failed to see it at all. It was, again, we can look in the past, looks super easy to tell now, but during that time, it was really hard to see it. But this uncomfortable truth about investing has proven true over and over and over again. And that is this: you can make projections out next year. I agree with there completely. You can make very reasonable projections out next year. 2 years out, unless you have guidance from the company and it's kind of a stable business, it gets a little shaky there, a little bit, start speculating there. 3 years out is really murky and you're honestly just guessing. And 5 or 10 years or 20, 30 is utterly useless speculation. It is literally the worst thing to use to look at investment decisions today. Decisions I'm going to make today, it is utterly useless for that because it is pure 100% speculation. Now, sure, you can model out anything you want, but it's not realistic and it's strictly a guess, which leads me to Tesla to illustrate and prove and show you exactly why these models that go out 5 or 10 years are pure speculation and how flawed all of that speculation is. So I'm going to give you all the nuts and bolts of that with the example of Tesla because nothing illustrates it better than this. So think back to when Tesla was at $400 or so. How many people out there who were bullish on Tesla and had these models modeled out on all their little pretty spreadsheets and models Tesla to $199 today, way back in 2021. So back in 2021, how many of those guys with their pretty little spreadsheets and their charts and all that sort of stuff like that, how many of them had Tesla falling to $199 today? Nobody is my guess, because I went back and I looked hard trying to find somebody saying that, and all I found were projections to 800, 1,000, 1,500 as of today, and some even higher than that. And yes, I adjusted those numbers for the stock splits. So those numbers were actually higher on those videos, but I adjusted them down for the stock splits so that way we're all speaking the same language right here. Those models were absolutely useless and pure speculation. And here's why modeling out that far is just completely useless. You cannot model human behavior. You cannot model almost 10% inflation, and then you cannot model the fastest Fed raise in history. You cannot model out Elon's Twitter activity or him deciding to actually just buy Twitter altogether. You cannot model Cybertruck being harder than expected and taking longer than expected. You cannot model out geopolitical events. You can't model out any of the variables that happen every single year that make models useless when you speculate out 5 or 10 years or more into the future. Don't base your investing decisions on these speculative numbers. Base your investing decisions on solid fundamentals like valuation. And if it's undervalued, you buy. If it's overvalued, you don't. And it's honestly that simple in the end. Way back in 2021, the spreadsheet said buy Tesla at 400. That's what they said because it was a great deal. The fundamentals said great company, but the multiple said ridiculously overpriced at a PE over 1,000 at the time, so you should not buy the stock for right now. Keep it on your watch list and wait for it to fall, and then buy the stock because it's a great company. That illustrates perfectly exactly why fundamentals always win over the long run, and all the speculators end up eventually losing big time. Despite all the pretty charts and all the pretty graphs and all the math involved and all these complex formulas, in the end, they are speculating. That's it. Now, to be clear, I want all of these companies to succeed to those levels that everybody's putting out there. I will see my wealth grow to stupid levels if they do. But I also know not to make decisions based upon that wild speculation either, because there's no need to speculate like that at all and base current decisions on models and spreadsheets and assumptions that are a pure guess when they're that far out, because they may lead you to ignore fundamentals like a PE of over 1,000 and encourage you to buy a stock instead. Now, I agree they are fun and maybe a cool what if type thing that you're looking at, kind of a cool what if game per se, but the only way to avoid trouble and buy when it makes sense is to stick to your fundamentals and avoid speculating beyond what you can reasonably guess at, which is the numbers for the next year, maybe 2 years, that's it. So if you're kind of staying within that context and you want to use a spreadsheet or a pretty formula thing or whatever, okay, if I'm looking at the other fundamentals and I want to use that to kind of help project out a couple years, that can make some sense. But when you're looking out and people are talking about 2030 or 5 years from now, 10 years from now, they are purely speculating, and outside of fun, It does not enter into my investing equation at all. It means absolutely zero. And if you want to learn exactly how to do that sort of fundamental analysis on stocks, make sure you check out the pinned comment down there for my group, where we have 5 courses that are directly related to just that you can take for free. We have a stock analyzer tool you can use for free. We have the best 6, 7, and 8-figure Discord out there. You can talk to me directly anytime you want. Slide into my DMs, jump on our live Q&As. There is so much going on and so much more coming that, guys, I'm just so excited. Check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. Thanks for watching, and we'll see you in the next one.